backwards when I was putting the spreadsheet together that this company was reporting after the close, and I don't see that anything actually. Well, actually, I guess it did. It did get a positive response and closed the after hours at $18.21 after closing at 17.54. So this was going to be an official idea above this level here at 17.65, but you can see that it's going to be gapping higher tomorrow. If it closes, if it opens where it closed the after-hour session, then it should be opening at $18.21. Now, I didn't look at the earnings, nor am I going to look at the earnings or the sales. I'm simply not interested. But what I am interested in is obviously we've got a very bullish-looking pattern here on the daily and on the weekly time frame where we've broken some resistance here. So the stock gaps up tomorrow. This could be the beginning. This earnings, we're in earnings cycle. This week is a very heavy week. And what we want to do is we want to focus on the setups. We don't want to really focus so much on just the market, but focus on the individual stock trade setups and then manage risk. And a big part of managing risk this week and next week is going to be being aware of when those earnings are due out. So tomorrow, so the earnings were responded to positively. If that holds tomorrow, and a lot of times the after hours stuff, you can see this thing open at 16.50 tomorrow because somebody downgrades it. But if it holds up here, what is the correct way to trade this stock if you're interested in it? Well, let's say this is our little resistance line that I had drawn here, and tomorrow we open up at this level. What you don't want to do, in my mind, is chase the stock at the open. Sometimes they do continue to run, and they'll just continue to ramp higher. That's not typical. What's more typical is they'll run for maybe 5 or 10 minutes, then they'll begin to pull back a little bit, settle down a little, and then begin moving higher, in the afternoon. So what we'd see is that we would have tomorrow on a 1-minute time frame. We would want to be looking at the daily VWAP, or the VWAP for that day, and it might look something like this. And once we see that VWAP kind of flatten out after a half hour or so, so you want to wait basically a half hour. Let that gap get absorbed. See if it goes down below the daily VWAP. If it gets back above the daily VWAP, then right here, let's just say it's $18 even. So it gaps, or let's say it gaps up to 18.10, runs up to 18.50, and then pulls back to 18.20. Gets above the VWAP at 18.35. So you could buy it at 18.35 with a stop at about $18.15 or so. So just a little bit below that pullback low. So it's a low risk entry typically, and a lot of times, once that gap, what you see is you see heavy volume the first few bars, the first half hour or so. Then you want to see the volume begin to diminish in there. And then, don't worry so much about waiting for the volume to spike before you buy. You want to buy based on price. Let that VWAP kind of flatten out, the stock gets it back above it, and then that would be a good way to trade Parexel. And that's a good way to trade any of these stocks that gap. I talk about it a lot, but still get a lot of questions about it, so I like to, kind of explain that over again because it is a common issue to deal with. Is what do you do with these stocks that gap higher? Well, you have to either just let them go or chase them, which obviously doesn't make sense, or be patient, be disciplined, and deal with the stock on your own terms based on logic, on intellect, not on getting excited about an emotion, and an emotional response to, well, these earnings were great, their sales were X, Y, Z, whatever. That stuff. Let the amateurs chase the stocks that way. Have a plan in place and figure out how you want to interact with the market so that you don't make emotional decisions, because the emotional decisions are the ones that are going to end up costing you